Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Thursday, October 3rd, 2019. So 11:53 a.m. as I'm 11:53 a.m. Eastern Time as I'm starting the video, and I figured it was a good time to do an update. I want to talk about what's happened today, where I think the markets are going. All right, so earlier on, I'm going to start here. We're going to jump over to the website. I posted the bear flag patterns today, and then I posted once they broke down. As I said before that there would probably be either one or two catalysts today: the 8:30 unemployment numbers, and then the unemployment claims, and then the or jobless claims, and then the ISM ISM non-manufacturing data that came out at 10 o'clock. So it was the latter of the two. The 10 o'clock did it, and so we broke down, and it was impulsive. Everything you wanted to see. Now, a couple comments, and I'm going to look into actually seeing if I can add a feature where if you come in, if you are an active trader, and I know everybody's not, but whether it's on market analysis like this, or maybe a trade idea post. I put out Apple today as an unofficial, just something to watch, and I'm going to look into see if I can have a program add some feature where you can check a box to receive email notifications anytime there's an additional comment made to a post that you're interested in. That way your inbox isn't flooded with 13 comments so far or posts here if you're not interested in this intraday kind of analysis right now. But a couple points I wanted to make is, and I'll get to this in a second when we look at the daily charts. We kissed the 200-day right when that reversal happened. We had just it was just below the bear flags on those 60-minute charts, so we hit that, and I have no doubt that at least some part of the today's buying was triggered by buyers that on that initial tag of the 200-day in QQQ. Because remember, we hit it in SPY yesterday and then bounced, but we didn't hit it in QQQ until today. Today was the first time since August 5th. So I'll get to that in a second. But right now I wanted to lead with what I'm looking at here is levels and where we might go from here. So this I posted 11:22, so about 20 minutes ago or so. 30 minutes ago. Snapback rally following the bear flags has taken ES back to the top of the flag and the more significant 2900-ish resistance level, while also taking NQ back to the top of the flag in this more significant 7600. So let's talk on those levels real quick, and I'll show you why I think they're significant. I have two boards here for NQ. Let's look at this one. Okay, so remember I've talked quite a bit about these trading ranges, the August trading ranges, as well as the midpoints on those trading ranges. So this is August trading range right here. Again, I am excluding this momentum fueled overshoot. We had a waterfall type selling coming down into there, and so we overshot that level. But on both ES and NQ, after that initial thrust down, we stabilized and had three roughly equal reactions all around the same level. So that to me is really the range right there. Again, you can exclude this little momentum fueled overshoot there. So after that, I talked about how in the trading range of midpoint it was significant. I've covered that quite a bit in recent videos. So that's where we've rallied to. We broke it yesterday, and so far this kickback rally, I'm viewing it as another objective short. The breakdown itself was, but it was almost an impossible one to catch if you weren't positioned short already. I'll get to that in a second. The market dropped instantly, about over, I guess, 1%. We'll measure it out here in a minute. And unless you either were already short ahead of time, or happen to be lucky enough if you had a standing sell stop limit order in. That is a order. If you don't have a position you want to short, you can put a sell stop saying, short, go short on blah blah on NQ here, let's say, on if it hits a price of 75.30 or lower, whatever your number is, and then that order will automatically trigger and fill for you. So it's a way to get a jump start on a trade. I like to use those on. Sometimes if I'm watching, let's say I'm on the intraday chart, and I see futures or NQ or QQQ or SPY bottoming, basing here, and everything, divergences and other indicators and price action tell me it'll break out. Sometimes I'll set a buy stop right there, especially on a lot of stocks, because they can really run. If you miss the breakout, if you try to enter the order and click it with your mouse and submit it, by the time you do, you miss a fill. So that's what buy stops are good for. And anyways, that's what like I said, you would almost had one in place today. to get that. So with the kickback rally here to resistance, I think that's where we'll likely fail. I don't see a lot in here. We were oversold recently on the 60-minute time frame, but I don't see a lot of much in the charts that tell me we're bottoming. We're going to have some play around those 200 days, which we've had so far for the last 2 days. So, maybe we keep buying those for a couple days, maybe not. But let me just keep it simple and move on. I think this is an objective level. That's what I posted on that last comment section of that post, about 7,600. And I'm going to speak to these spikes right now, and I'm going to speak to this big move here in a second after I get to ES. So that's it, the midpoint of the channel. I think, like I said, depending on your target, if you're an active trader, your stops could be commensurate to where your price target is. If you're looking for a 10, 15, 30% drop in the market, and you're layering in, adding into, scaling into short positions on a bounce back, because that's the mode I'm in now. Sell the rips, buy the, cover the dips and sell the rips, meaning short into the rips like this. And that's what I did. I added some short exposure there, right here, that bounce back there. And I'll cover, like I said earlier, if and when we hit the 7402 level. I still think we're going there. All right, so that's that. Let me just show you on ES. And if I'm wrong again, you short there, and the stops are just on the other side. ES, we have a similar story. As I said, you have to bounce back to the top of the bear flag patterns, as well as here's your August trading range. And on ES, it's more of instead of a hard midpoint line, we have really these ranges here. You can see a couple lines. They really split the difference. You have a midpoint really range right there, two different support resistance lines, and then this one down here. That's pretty much the one we bounced off today. So really, it's the top of that range is about 2,900 right there. It says 2897.48, so we'll round that up to 2,900. And again, that's where I think that's likely to cap this bounce. And if not, then there's, the next stop would be all the way at the top, and that's very significant resistance. And it's only a couple, maybe a % or so overhead, so it's not that much. Let me try to measure it for you. Yeah, about 1 to 1.5%, the top of the range. So I think, and that's going to be significant resistance if we happen to get there. So those are levels to watch right now. And again, my target for ES, if you're an ES trader, and I'll give you comparable targets on SPY, down to about 2820 or so. Of course, watch NQ, QQQ, SPY. If they hit support just before that, that's where the buyers might step in. And of course, if we go up here, then I'll just be looking at that. This is another potential shorting up, but again, we'll see how the charts develop, if and when we get there. Okay, I said I'd talk about the 200-day, which is a big level. A lot of traders step in and trade off the 200-day, and here it is. So again, yesterday we fell a little shy. Today we hit it on the breakdown, and so we likely had some buyers step in. And so far, it's been successfully defended. So again, I would almost be surprised to see the Qs slice through there without even a reaction at all. So that's a reaction. Here's again last time we hit it there. Almost a perfect kiss. That was August 5th right there, and that's where the buyer stepped in, came back for a near test, and then we moved up. Little slice through. Like I said, it's not perfect, but when it hasn't been visited in a while, that's where buyers tend to step in. And again, we hit it on SPY yesterday, but not QQQ. So that's one likely cause for the bounce. And also now watch for a break, a solid break and close below both those in QQQ and SPY, especially now that they've been tested. See right here, you didn't really have a test of these. You sliced through it, and then you overshot it on a momentum fueled downside. But here, we've been testing it recently. So to me, a break now would be much more significant than a break if had we just waterfalled through it yesterday. Might have been an overshoot, and we could have snapped back today. So food for thought there. Now let's talk about the move today. For those of you that might be new to trading, might say, "Oh my gosh, Randy, that's nothing but bullish." I mean, to see the market has rallied from below today after that sell-off, 1.75, and I'm talking QQQ. It's tech heavy, so you're going to have a little more upside probably than the SPY rally off the bottom. But so yeah, we'll call it a 1.9 almost. So almost a 2% rally. Wow. Well, let's put it in perspective. Well, what happened, first of all, everything I went over in the 60-minute chart, but here's that trend line. I haven't even modified, I've just extended it. Same trend line I shared yesterday. So after this was the break of the flags right there, the initial sell-off, kickback, perfect test, 2, 3, 4 candles, tagged that trend line perfectly, pulled back, and then powered through it. So you had this little A, B, C corrective wave type pattern. You can call that a flag too, and a breakout. Bull flag, that would be. And look, we reversed the same levels I had on this chart yesterday. A 185.23, almost a perfect reversal. And then where did we pull back to? That 184.42 level, and we've been consolidating there right now. So these are the levels to watch. If you're day trading, obviously you want to see now a break of the previous reaction high, and a break of that level will be bearish, and then you look for a back test here. You can trade off these levels. Like I said, that's same levels that were highlighted yesterday, so it's produced several reactions, and again you can game those. Now here's what I wanted to do, is talk about that 1 point almost 2% turnaround today in QQQ. So before we get into that, I'm going to go to a longer term time frame on QQQ. Let's talk about what's happening lately in the market, and that is an expansion in volatility. Now you can look at the VIX to tell you these are when the market has corrected. The VIX goes up when the stock market corrects. It is, it's a volatility index. Usually doesn't go up when the stock market's going up strong. It's falling. And so, but it doesn't take a look at the VIX. If you've traded recently, if you've even come home and turned on the TV, the market's been volatile, it's been dropping. And so therefore, that's a nature of of the elevated VIX. You're going to see bigger day swings, intraday swings. Again, the volatility index. Volatility isn't just stocks dropping. It's sharp moves up, sharp moves down. So when the VIX expands like this, the intraday price swings go from a 1/4 point, 1/2%, or at least 1% or less when it's down here at the low end of its range, to these 2%, 3%, sometimes even 4 or 5% intraday swings. It's the nature of the beast. So what you do is try not to read too much into a big swoon down or a big counter trend bounce up, because it's just noise within the bigger picture. That's what I'm trying to get to. And if you're curious, there's TVIX, what it looks like here. TVIX put in a divergent low, although the VIX itself didn't. So we have a divergent low. Well, we've had a divergent low. There was one back there, rally, another divergent low. These are all potential targets. Same chart, I shared that before. But here, let's go back to the point I was trying to impress here. Let's go to a 15-minute chart of QQQ and take a look at this. And now let's find a board without any annotations here, and try to put this correction into perspective so far. So when was that? September, early mid-September, right here. Do I have it on this chart? Yes, I do. Okay, I just want to make sure I had the whole drop into this 15-minute chart. So here's what I'm going to do. I'm going to measure this spike up right here, and now we're going to put it in perspective. So there's our 1.9% reversal so far in QQQ. And you can see, since this correction started, it is no more or less, in fact almost exactly what that counter trend rip. And keep in mind, I focused on this because this is our near term. This was the top, and this is our downtrend. Downtrend is a security making a series of lower lows and lower highs, and that's exactly what we have so far. Maybe it ends, maybe it's over, only time will tell. Let's not worry about that right now. Let's just, again, put things in perspective. So there it is, nearly equal rip in both. And what I like when I take a line tool like this, what it's telling me is two things. I'm not just measuring the exact, showing you, comparing the scope, but also the intensity of the rip. Because if this trend line, in other words, if this was the same 1.9% gain, but it took a couple days or 1 or 2 trading sessions to do it, then this is your time axis right here. And so you can see that's an impulsive, nearly straight up rip. And again, it's just the nature of the beast during these kind of corrective phases. This was leading up to the top. Here's another one right here from low to high that actually went even more. It went, but over, it took a little longer to get there. Here's one right there. There's another impulsive move, and it peaked the initial. It didn't really pull back until about the same level there. So that's what I wanted to just point out. You can see, take a look at these moves, and this is just par for the course when you have elevated volatility. So what is my takeaway again? Don't try to read into it as uber bullish to see the stock market jump up 2% in just a couple hours. Hey, if they continue to build on it and they start taking out resistance levels, trend lines, we haven't even retraced. We haven't even hit what I usually look at the bare minimum for a counter trend rally. Right here, the 38.2% Fibonacci retracement level. Here, let me pull this one off here. What this line right here from the top of the correction when it started right here in September, so far down to the lows, these dotted lines right here are the 32.8 or 38.2, 50%, and 61.8% Fibonacci retracements. In a typical counter trend rally, if there's more downside to come, usually goes to anywhere between in that range, 38, 50, and quite often it returns right on those fibs. It's pretty impressive how often they work. Especially, I like to align them with other price and support resistance. So there it is. I can even turn on. I usually don't use the lowest numbers. You can put a 23.6 is also a Fibonacci number there, value, and that's right about where we're at right now. So to look at it this way, should we reverse soon and hit my targets, that's a very weak bounce actually, is what it is, compared to these other bounces and compared to the retracement of the entire move down so far. Okay, let me give you a little more on QQQ. I know I put up a lot on the futures. And again, if you're not comfortable trading futures, if it's because the position sizes are too large, don't forget about the micro minis, MNQ, MES, or M2K for the Russell 2000 futures. I'm going to drag this line right here that down to about 185.90. That's where I thought I had it there before. That's at Gap City right there. Remember all those gaps and around the midpoint of the QQQ channel. Remember, you don't have the 3 equal lows on QQQ. The futures hit those lows in the after hours session, or at least that one of those 3 there. And so what I have is an approximate target there. If we do fail to surmount the midpoint, or QQQ, look for it to ideally to cap any bounce to be capped around 185.90, and this would be my target right here. We'll probably bounce around these 2 previous reaction lows at most, and it would still keep the bearish scenario intact. You could certainly go a little further because that would backtest this trend line that was broken here. So again, I see right now near-term minimum downside, and to be clear, I think it's an objective shorting op, for active traders with a stop somewhat above, or swing traders that are looking to layer in. Like I said, we don't have an all-in short sell signal on the markets yet, because we haven't closed the week. I need to see how those weekly candlesticks are going to look on this Friday, and if I don't see them, convincing bearish, solid sell signals on the weekly this Friday, we'll just look again next week and the following week, and if things start to change to the upside, and looks like we might get that bounce to a marginal new high, I'll try to adjust my analysis and my outlook as soon as possible. Right now, we're still within these trading ranges, so right now I'm focused more on like I said, where to add shorts and and actively trade, where to cover until we get some real, when we get some solid sell signals. If we get to where I think we will sometime this year, whether it's after a marginal new high or it starts very soon, we get to that waterfall type selling. At that point, I'm not so concerned about gaming the quick pullbacks off the 1, 5, 15, 60-minute charts. That's where you can tuck away a bunch of shorts and ride out that the powerful we'll see if we get a wave 3 down. That'd be really nice. Wave 1, a little kickback rally, and then a P3. But that, again, I'm getting ahead of myself right now. That would probably go on even look at the weekly charts for that. And a quick look at SPY for your SPY traders. Remember, we kissed the 200 yesterday, bounce. We cut it pretty good today, but we're back above it right now. So, this is bull fodder right here. This keeps the bulls charged, and rightfully so, because like I said, those are key levels. You can see we took them intraday. It took them out 4 different occasions, closed back above it each and every time. Bears were unable to take the market down through there with conviction, so we rallied up and put in another divergent high. But we're back here again already, and so again, I've talked about this. This is, in a healthy trending market, you don't visit the 200-day as often. This is the market just really slowing down. Momentum has been waning. You probably have heard about it now. The market year to date, or over the last year to date, it's up, but those numbers are useless because that starts right after this huge 20-something% drop. So it's kind of a skewed number. The 12-month return, we're below where we were a year ago. The market went negative yesterday, so I don't know at this very moment. We're probably still below there. But again, that's what I'm looking for on SPY. And let me give you those 60-minute targets, and we'll wrap this up. All right, so on SPY, we broke down again. It was, I'll tell you, they looked convincing. Obviously, it was, the breakdown coincided with that ISM report. Looked like the real thing, but we snapped right back above it. And here's one lesson. I mean, this is a 60-minute chart. I didn't see this at the time, but I always talk about whatever time frame you're trading off of, you want to base your buy and sell signals, ideally, if you want a confirmation, on a candlestick close on that period. This is a 60-minute chart. This 60-minute candle, we went down intra-period, but then closed back above. The body, the fat part, the bottom part, or the top of the body is where it closed. So that was a not a confirmed breakdown on the 60-minute at least. And we had another reaction there the other day. We have 4 reactions so far. So if you want to look for the next sell signal, or one of those, other than objective area to short, a sell signal would come on a solid break of this trend line. I think if we break it again, we'll probably go on down. Then targets, look for those. See, we don't have the 3 equal lows on SPY, and that's why it's a little harder to identify a target. The support is not as well defined, but I think if we punch down through there, we'll come in somewhere around these recent lows. Most likely, but now let me leave it at this. I talked about once we entered, before it even happened, that if and when we entered these August trading ranges, remember QQQ did it first, but SPY didn't do it until just recently. I said once that happens, you will probably see impulsive selling and not just meandering down on through there. That's what we've seen so far. So remember, we were very oversold in the near term, so the fact we bounced here, that's what happens when you're shorting. The more oversold you get, the greater the odds for a snapback, short covering rally, short squeeze, oversold rally, whatever you want to call it. They're one and the same in this instance. And that's what happened today. We just got a little bit oversold. Buyer stepped in. I didn't foresee that coming. It probably was, it had a lot to do probably with the 200-day. But again, where we're at now, I'm viewing this as a, shorting op, bounce back to those resistance levels. Midpoint on SPY, let me turn this line on right now. I have this one tuned down. I already gave you the levels on ES and QQQ and then NQ. Right there, you can see a lot of reactions I see. Let me show it to you. So this is really where ideally, to keep the bearish, near-term bearish scenario alive, we have a reaction there from above, a couple reactions from below, big old gap right through it there, another reaction from above followed by a gap. Gap to the upside, actually. Another gap, reaction. So, yeah, 289.90 is really ideally where this thing should be capped. And we could reverse from here, all the better. There's minor resistance, or quite a bit up here at the top of the flags. So those are the levels I'm watching, and I'm still favoring that other thrust down. And as I do this video, I think this is an objective area to short for an active trade, with a stop somewhat above, and then if you're not an active trader and you don't want to be sucked into another fake out move, we've had a couple this year, then give it a few days. We'll see how these weekly charts close tomorrow, and you can kind of just eyeball this weekly chart as well and see that there's quite a bit of support on these recent lows right here. So if all this gets taken out, if we drop below here, you see a weekly close below this line right here. Let me give it to you. I don't know, I hate to put hard numbers because it's not always so easy as black and white, where if you're above this line it's bullish, below it bearish. But if we took out 281, we're going to take out the recent lows. We're going to have taken out the 40-week moving average, which is the same as the 200-day moving average. And let's see if we have anything similar on QQQ. There was a candle lower than that there, but I see a lot of reactions here on this candle. But I mean, you want to make it safe. Just say that recent low right there, that candle right there. So 180 to about 182, and pretty much below today's lows, because that'll put us below that 200-day right there. So those are levels to watch again on a closing basis, and that, like I said, would give me confidence to even add more to my swing short positions versus just this active trading stuff that I was talking about earlier. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Good luck on your trades.